Welcome to the June 21st, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, a team of 10 serving clients with a passion from the Crescent in Dallas. And I'm also your financial weatherman, YouTube, McGowan Group. Be sure to subscribe and tell your friends when they ask you, what do you do financially? Well, this is a great source because we graphically go through the global markets. This week, we're just going to run through some of the most important headlines and the resulting surprises or changes that have happened in 2021. So we'll start with the Dow going to 35,000, surprised a lot of people. Look at what's happened since June. So this was actually April 30th, you hit 25,000, and at the start of June, you've been going down 100 or more points a day, almost every trading day in June. Now we're closer to 33,000. So we're in the first correction phase from this raging bull market that took the Dow to 30,000, 35,000. So what happens from here? Well, we have raised some safety already, and we've got targets picked out, and we do incrementally profit taking, and then in a correction we'll actually put that money to work for dividend advantage, and we got our targets picked out. What is this? This is Bitcoin. $2.5 trillion at the peak between 10,000 different cryptocurrencies. Crypto Mania was one of the top headlines of the year, and Bitcoin resulting went to 65,000 and then boom, 30,000. That's a disappointment if you paid 65,000 to say the least. In any case, the cryptocurrency mania, it's still well underway, but over $1 trillion just disappeared. So keep that in mind when you're looking for the next Dogecoin. It may not be Dogecoin. Okay, here, this is the housing boom. That's another huge story this year. This is the percentage increase in the price of a house, and it's accelerating. The monthly percentage increase in the price of a house, it's actually kind of parabolic at this point. You're starting to get some construction constraints, supply constraints, and yes, that's leading to inflation, which we'll get to. But the housing boom, a big surprise that it accelerated this year already. And inflation, wow. So oil hit 72, it's pulled back closer to 70 here at the end of the week. Inflation at 5%, that's the highest since 2008. So you got a 13-year high in inflation. And what's happened in the bond markets and with the Fed as a result? Because everybody worries about inflation like it's going to be 1981 and mortgages be 20% and we have massive inflation, and then you have a recession over it. So that's why people worry about it. And for the last 40 years, they've over-anticipated inflation almost every single time. Now here, this is inflation anticipation. This is the price of a 20-year Treasury bond. And you can see interest rates going back kind of normal on a 10-year Treasury from 0.5 to about 1.8. It's come back down now to 1.5. But you can see the price impact. So if you had a long-term government securities fund over at Vanguard, you're down 10% and you've got a yield of only 1.7. It's going to take 7 years to climb back up out of that if the rates don't go back down. If they go higher, the duration risk is evidenced by this minus 10%. Rates went up 1, duration risk on a 10-year is actually about 7%. And you can see that that's a disappointment for a major sector in fixed income. By the way, high yield bonds are up in price for the year plus the yield. They tend to do better when interest rates rise in terms of total return. But we're starting to take profits in the high yields that go to a premium. Vanguard Total Bond Market, that's the investment grade, low cost alternative that makes up a huge part of portfolios. It's a minus 2% year-to-date return, right? That rate spike was the reason, and it's only a 1.76 yield. That means that a huge part of fixed income allocations by advisors are defective. And we'll cover more about that at networthradio.com. That's our podcast. You can go to Apple Podcasts, download the Apple Podcast, or just go to networthradio.com for the extended program. All right, this is how many people got a job. 159 million at the peak. There's the pandemic. Tragically, 16 million lost their jobs. We're now back up to almost to 152 million. But there's good news on the jobs market. Look at this. This is 9.3 million jobs waiting to be filled. That puts the U.S. on track at some point for record employment. And that's also good news underscoring the economy. What's this? Wow. Oil hitting 72, the energy sector back in favor, the pipelines that we talked about all of last year, which were also underperforming. It was hard to hold them last year, but the reinvestments are now paying off. It is a 50% total return. Energy is leading the market. It's the most popular sector. You're starting to get some hot money momentum in energy, and you could be in an oil super cycle, and you're starting to hear predictions of $100. It was $115 in the last recovery in 2010, especially when they put restrictions on new supply. Sounds familiar. Well, you could be in an oil super cycle, and the pipelines are benefiting. This is something that you don't hear about on the news networks, especially COVID News Network. Now that the news is good, the number of new daily cases substantially below 15,000 at points. And so with the new COVID-19 cases trailing off, it is a record succession in the pandemic because we really didn't have testing when the pandemic began. And we've already dropped below those numbers with massive more amounts of testing. You're running out of victims, if you will. And it's good news for the recovery. And it also says Operation Warp Speed was a huge success in getting the vaccines out. And that gives us great confidence that you'll probably see record employment going forward. What does it mean for the investor? Well, you want to keep some dry gunpowder for the corrections, and the next 3 years, you could certainly be range bound, going to 30,000 Dow or below, and maybe back to that 35,000. But if you have good targets picked out, great dividend companies, and other categories, this could be a very successful 3 years. I'm Spencer McGowan, President, McGowan Group. Thank you for joining us for YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.